So welcome back to my channel. So now the question comes in that what's the daily bias? Daily bias is like to know about the order flow which is going on a daily time frame. Okay, if on a daily time frame, if market is going by towards the upside, so it's a bullish daily bias. If it is going towards the downside, it is a bearish daily bias. Okay, so now how to predict that where the daily time frame will be going? So what you have to do is you have to mark the extreme swing highs and swing lows. Okay, like this. You have to mark it like this, and now if you guys can see, it's a daily time frame. Okay, but it looks like it's a 5-minute time frame or something. Okay, so now if you look it over here, if I want to know that what is the bias right now, what's the bias going on right now, so I will say that bias is bullish right now. Okay, so how I know that bias is bullish right now? Because I can see that price has taken the liquidity from here. Okay, the price has taken the liquidity from here, like you can see. So on this day, on 16 April, from 16 April I will be bullish. Okay, and now if you look at over here, price took these highs over here from this candle on 8 March. That's why I was bearish from 8 March, right? From 8 March it is bearish, and it's going down and down, and then it came back up and is going down. And then what happened was it went one more time to take the liquidity from here, and then it fell down. So now this is a daily bias, and daily bias is used for those who do swing trading, for example 4H time frame. Okay, or for not even a 4H, like on a 1H time frame or 4H time frame, because in swing trading you want to know that where is the daily order flow is going. Okay, but if you are an intraday, you don't need a daily bias. You need a short-term trend which you can find out from 1H time frame or a 4H time frame, that where's the market is going, like what's market seeking for on 1H time frame. It's seeking for buy side liquidity or sell side liquidity. Because if you're not doing swing trading, okay, if you're not holding trade for a few days, then what will happen is, like if you look it over here like this, okay, it was a liquidity graph, buy side liquidity graph on 8 March. And now if you go on 15-minute time frame over here, okay, and now if you take a sell over here, okay, it will take so many days to fall down, but then also after that it comes up one more time. Okay, and now after that it falls, but it does not fall that much, it comes back up one more time. So if you are trading it on a smaller time frame with a daily bias, so for example if you're trading on, if you are predicting daily bias and then you're going on 5-minute time frame, your stop loss will get hit. Okay, the stop loss will get hit and market will go into your direction, but the stop loss will get hit. So for example if you look it over here, okay, there was this stop loss hunt, and then this candle towards the upside, it took all the stop loss which was above of these relative equal highs. Okay, and then price created another like bullish type of move, trend line, if you can see, and then all of a sudden it falls down. So now what you have to do is you can take a buy on these type of days from this fair value gap. If you look at over here closely, you can take a buy from here from this fair value gap. And why this fair value gap is useful? Because price took the sell side liquidity from here, but on daily time frame we can see that price has taken the buy side liquidity. But then also you will find out that this fair value gap is working for buys, okay, and thus for sells it's not working. If you look at over here, like for sellings, right? So for selling you can see a fair value gap which was right over here, but it get rejected from here. Okay, and now you will be thinking that daily bias is bearish, so it will go down, so I should only look for sells. So this what will happen with you. And on next day also it will be making this type of thing, and if you're on a 5-minute time frame, you can easily find out one of a fair value gap over here, and you can enter, and you can think like this is a buy side liquidity, I should target for it, and then you will get another loss. So the thing which I'm trying to say, if you want to trade daily time frame, then you should be a swing trader. Okay, not trade at a daily time frame if you want to know the daily bias. Okay, so if you want to apply a daily bias, right, so now you can see that on daily time frame, let's look for this example. Okay, wait a minute, let's look for this example over here. Okay, if you go on 1H time frame, now if you're trading on 1H time frame and if you want to hold trades for a few days, then what you can do is you can look for daily bias and you can take trades. So this is how you will frame your trades if you trade on 1H time frame. You can see that on daily time frame price has taken this low, and you are assuming that there will be sell side liquidity below here, and there is a round psychological level also of 0.64, right? It's a round psychological level over here, if you guys can see. Okay, so now it fell down till this. So now on this day from 16, okay, 16 was the last day for me to be bearish. After 16 I will be bullish. Okay, on 17 I will be bullish. So if you go on 4H time frame, you can see on 17 there was a move over here, and there was another move over here. Okay, so on 17 it was like a bullish move like this, and there was this fair value gap working over here. Okay, after taking the liquidity, this line is like liquidity. So there was this break of structure of this structure high, and there was this fair value gap. Wait, I should do zoom in. There was this fair value gap, it tapped into it, it went up, and then it came down, tapped into this fair value gap, it went up, and on next day it went up, and then it fell down till this fair value gap, and people were thinking that it will go up. Okay, the guys, those who trade daily bias, or they know that what's the daily bias. But after that what will happen is on next day it will fall down and take all the stop losses which is below over here. Okay, so on 17, from 17 we are bullish, but your bias is bullish, but still you can get a loss on these type of days. Okay, you can still get a loss, because what will happen is you are trading on a smaller time frame, okay, but the daily bias is really big picture. But if you trade it in a smaller time frame, it will be a loss. Okay, so now what will happen is if you're on 1 inch time frame, price went up like this and it gave another break towards the downside, and then it went up and it left a really good fair value gap over here also and over here also. All right, but now what you can see is like it didn't came back to this fair value gap, it went really up. So now there was this supply zone over here and it got rejected from the supply zone. So that's a really good chance to see a liquidity run. This is a liquidity run. Okay, so now you can see a fair value gap over here like this. So you can enter on this and then you can hold the trade for 3 or 4 days. Okay, if you hold the trade for 3 or 4 days, or suppose your target is this high, so for example you took a buy from the starting of this fair value gap and you took the stop loss of 50 pips, and now the swing traders, they really have this type of big stop loss because price can go down to this fair value gap or this fair value gap. Okay, so that's why, and now your target can be 1:2 or this high over here. Okay, and then that can be your target. You can hold trade for like few days and your target will get hit. So now this is how you can frame the trades on 1 inch time frame with the daily time frame bias. Okay, but if you go on 15-minute time frame over here, okay, on this day on 6/17 it took the sell side liquidity, right? So from 17 you will be looking for bias, but look at over here, the fair value gap which was responsible for sell, it's working. Like from this fair value gap there was a sell move over here. Okay, so now what you will do is you will think like, okay, the bias is bullish, I can see the daily bias is bullish, but so I should look for the bias only. So you will take trades on this type of fair value gap, and this is what will happen with you. It will go down and take your stop loss. So the thing which I'm trying to say, what you will do is, if you know a short-term bias, which is 1 inch time frame bias, okay, now from daily bias I'm shifting to like how to know the short-term trend. So everybody knows how to find the daily bias. Okay, you have to just mark the swing highs and swing lows, and you have to just wait for the price to go and take the stop losses from there. Okay, like this, it went up, took the stop losses which was placed over here, all the stop losses are taken, then it went down, it took a lot of time, then it went up and took this high also once again to refill the liquidity, and then it went down, took the stop losses which was below of the structure. So from this day you will be bullish, and now it's going up, and now when price will go and take this high, then I will wait to see some sort of price change in like the change of character in 1 inch time frame. Okay, I want to see a short-term trends order flow to change from bullish to bearish, then only I will look for sells from here, like the way I did over here. Okay, like when price went down, you should look for some sort of change of character on 1 inch time frame. Okay, if there is not a change of character on 1 inch time frame, like this over here, like see over here, there was no change of character in this. Okay, but all of a sudden it fell down and then it went up, took this high, and after that I will look for buys over here over all day. This day I can take a loss, but from these days I will start looking for buys only. On this day also, this day also I will look for a buy on this day also, but I can take a loss over here, and loss is a part of the game. But overall I will predict good bias. Okay, and now if price goes up and takes this high, so now there I am, that's why it's in an indecision mode, that price can fall down from here and go below and take this low, and then it can go up, or it can go up and rip through this high, like it can just go above of this high. All right, and now as you can see over here that there is not a change of character happening. Okay, to see a change of character, we want to see price to go above and take this high, and then it should give us some sort of move towards the downside. So it will take time. Okay, and I think so today is Monday, so price will first go down and take this low, and then it can decide to go up for the rest of the week. Okay, so you understood that how to find the daily bias, that you have to do the same thing. You have to just mark the swing highs and swing lows, and then you have to assume that those swing highs and swing lows are support and resistance, and there will be stop losses above resistance, and there will be stop losses below of the support, and then you will take the trade from there. Then you will wait for price to go below that on daily time frame, and then you can easily find out that what will be the next few days bias. Okay, and now let's talk about short-term trend. What's the short-term trend? Okay, the short-term trend is like this 1 inch time frame over here. What you can look at, what you can see is that price was bullish over here. Okay, all the day price was, I should remove the drawing set. So price was bullish, it was going bullish, and it was creating some sort of trend line from here. Okay, it was creating a trend line, so it gave a trend line break on this day. So you should know that overall order flow on smaller time frame is what you call this. So the smaller time frame is on higher time frame, sorry, on daily time frame it's bullish. Okay, so now let's go and look at it. So over here you can see that it was creating a trend line, and then it gave a breakout, took these two lows, and then it went up. Okay, so now that's our bigger picture. So now think about like you're trading on 15-minute time frame or 5-minute time frame. Okay, so now what you have to do is you have to go on 15-minute time frame, and you have to look for the trend, short-term trend. So if you look at over here closely, how to find out the short-term trend? You can find out the short-term trend by looking at the higher highs and higher lows. So if price is doing like this, making higher highs and higher lows, it means like the short-term trend is bullish, but all of a sudden it goes like this, that's our entry. Then also it means that the short-term trend is bullish. Okay, price will keep on going up, and this thing happened because price want to take some liquidity or want to take some stop losses. That's why this thing happened. So if you look at over here, okay, price is creating a very good higher high, higher low, higher high, higher low, then created another higher high, then it created another higher low, then it went up. Okay, now let's see that this was the low. I think so it didn't took this low here. No, it didn't took this low, but it took these two relative equal lows right over here. Okay, first it took these two relative equal lows, and now you can take a buy over here, and you should place your stop loss a little bit big You know why? Because price can go down and take the stop losses which are under this one. So you should have a stop loss of 20 pips right over here, and your target should be this high. Okay, so you can get 1:2 in few hours. So that can be your trade on a smaller time frame. And now if you go on really smaller time frame, okay, like on a 5-minute time frame, on 5-minute time frame over here, okay, now look at over here closely. Price was creating a lower low, lower high, lower low, and then it did a lots of consolidation over here. Okay, then all of a sudden price went up and created a higher high. So that's how we know that price was, overall order flow of the price was bearish. Okay, but all of a sudden there is a break of structure, and this is enough for making fool of the traders, those who are trading higher highs and higher lows and trying to find a short-term trend. Over this moment, people will see that this is a breakout, but this is not a breakout. This is a liquidity grab. Okay, so now what you have to do is you have to place your sell limit right over here, and you should target for this low, and that what only happened after that. Okay, price kept on falling. So this is how you can find a short-term trend. So from 2 o'clock, okay, if you can see that there was a higher highs and higher lows going on, like over here, you can see the overall market was higher high, and then did a lots of consolidations in Asian session. Then there was a higher low. There was this higher high, higher low, higher high, and all of a sudden there's a lower low right over here, right? So just think about it. Price was creating higher high from last day, right? It was creating a higher high from here, right? So now all of a sudden there is like a bearish move or what. So after seeing this, a normal trader will think that this is a change of character, and he will look for sells from 50% of this price leg, or like he will look for sells from these 2 candles over here while thinking that these 2 candles are supply zone. Okay, but what we have to do is we have to just place our buy orders below of these 2 relative equal lows, and then it will go up. Okay, so that's how you have to find a short-term trend. Just look for higher highs and higher lows. You will get to know that what's the trend going. So if it is going like this, it means that it's a bullish trend going on. But all of a sudden, if it falls down like this, that will be your entry signal. You can enter right over there, and you can just target your take profit can be this high, and your stop loss will be like 10 pips from here, and it will go up and take the high and keep on making higher highs. Okay, and the same thing for sells also. Okay, it will keep on making higher lows, and then all of a sudden price will go up and take the high, and then it will fall down. Okay, so this is how the short-term trend is. And now how from the short-term trend you can frame out the trades. It's easy. Like this is the example right over here in front of you. Okay, so people will think like this candle right over here from last day was a very good demand zone, right? It was a very good demand zone. Price came till over this demand zone. It gave a reflection from there, and then it gave a breakout of that demand zone. So now you don't need bias, right? You know what's the short-term trend. The short-term trend is bullish, but all of a sudden it's creating a bearish scenario. So what you have to do is you have to just place your buy limits right over here, and you can take a stop loss of 10 pips, okay? Or you can do 15 pips because price can go down and take this low also over here. Okay, but I should say like, okay, let's do 15 pips only. Okay, no problem. Yes. Okay, don't be greedy. Don't do like this, like 5 pips stop loss, because price needs some room to breathe. Okay, so that's why like do it like this, 15 pips. And now your target can be these 2 relative equal highs, which is like only 1:1, I guess. Yes, and you can target for previous day's high, which is right over here. It will be our 1:2. Okay, and now people will say that 1:2 is too very simple, but if you can get 1:2 regularly and consistently, that's enough. Like 1:2 is enough to be a profitable trader. Okay, so now you understood that on daily time frame, if you want to know about daily bias, so this is a misconception. If you're trading on 5-minute time frame, most hardly just focus on 15-minute time frame or 1 inch time frame. That's it. Don't go on daily time frame because you are a scalper. If you're trading on a 5-minute time frame, you are a scalper. And if you're closing the trades below of the 4 hours, if you're closing the trade in 4 hours, then you are a scalper. Okay, and if you're holding trades more than 4 hours, you are an intraday trader. Okay, so that's why if you want to know the bias, if you're trading 5-minute time frame, you don't want to know what's the bias, what's the daily bias, what's the weekly bias. You should know about that what's going on 15-minute time frame or 1 inch time frame, what's the short-term trend. But if you are an intraday trader, or if you're a trader who trades on 30-minute 1 inch or 4 inch time frame and who holds the trade for few days, he can go on daily time frame and can do his daily bias analysis. Okay, like this, he can mark the swing highs and swing lows, and then he should wait for price to go down. Over here he will switch to bullish. Okay, like this, if price goes above of this high, he will switch into bearish, then it will go down, he'll switch into bullish, and this is how it keeps on going. Okay, and this is how it works. So I hope you understood this one. Okay, what's the daily bias and why and where the daily bias should be applied. It should be applied for swing traders or the intraday traders. Okay, those who are holding the trade more than 4 hours. Okay, and if you are a small term, like if you're a 5-minute trader or like on a 15-minute you are trading, then you only need a short-term trend. You don't need a daily bias. Okay, and now I should tell you about the candle range theory. But this candle range theory is like little bit it's really little bit of like confusing, but here it is. So what happened is, like with candle range theory, we say that if price is moving up, okay, if the overall bias of the price is bullish, so for example it was pure bullish over here, so overall bias is bullish, so price candle will go down, it will take the high of the previous day's candle, but it will not go and take the low of the previous day's candle. So what you can do is, if you really want to know what's the daily bias, then what you should do the previous day's candle high and low, and if previous day candle was bullish, then you can expect that another day's candle will be also bullish, and it will not go down and take the low of the previous day's candle. Okay, so and here is the very best example. If you see it over here, okay, this candle right over here, okay, this is a daily candle. This candle went up, closed above of this candle's high, okay, and then the next day candle opens, it comes down really close to this day before previous day's high. You can look for, and this is a very good setup. I discussed about this setup a lot on my this channel. I have lots of videos on this, but I'm just doing a revision. I'm just telling you about this. I'm just telling you all of this because of this daily bias subject. Okay, so if price comes down over here, there will be a buy entry, I know for sure. And if your bias is bullish, then this candle should not go and take the low of previous day's candle. Okay, and if it goes and takes the low of the previous day's candle, it means stop trading. You got a wrong bias, and then focus on the next day. Okay, so now what happens is price comes down. You can take a buy over here because it is coming into a discount zone. Okay, like look at over here, it's coming down in a discount zone, so you can take a look for a buy on a smaller time frame on this, and then it goes up and takes this high. I hope so it took this high. What was the high of this candle? High was 86. No, it was like a relative equal. Over here you can see, like see, it was 286 and it was 286. Okay, but on next day what happened, another candle opened and it went a little bit down, and then it went up and took these two relative equal highs. And now on this day, all of the traders, those who will see this type of candle, he will think like there is some sort of rejection, but it's not a rejection. Okay, it's like price is seeking for buy side liquidity. Price is doing liquidity run towards the buy side liquidity because it's bullish. Okay, that's why on this day also, because the previous day was bullish, it took the high of the day before yesterday's candle. So today also we are thinking that price will go and take the high of this candle, and it will not go and take the low of the previous day's candle right over here. Okay, and that what happened, it went up and took the high. On this day also what happened, price took the high of this day previous day, but it closed inside of the previous day's range, so it's an inside bar. Okay, so it's an inside bar, and what happened after that, price came down. But on what happened on the next day, price didn't went down and took the low of this. Like it was really close, but it didn't took the low, you know what I mean? Like it could have taken another low over here, but what happened, price went up and took the high. Okay, and the same thing happened on this day also. Price went up and took the high and closed inside. And same thing happened on, wait, should remove this day also. It just took the high of this candle, not the low. The same thing happened on this day also, and the same thing happened on this day also. But what happened on the next day, we are predicting that price will be bullish on this day also. Okay, but what happened, price just shorts towards the downside and closes outside of this candle's range over here. Okay, it just shorts down and closes outside of this candle's range. So from this day, we will do the same candle range theory which we did over here. We will see that price should not go up and take this candle's high. Price should not go up and take this candle's high. Price should not go up and take this candle's high, previous day's high. Okay, and price should seek for sell side liquidity, which is below of the previous day's low. Okay, like over here, and over here. Okay, so I hope you understood the candle range theory. And this is very simple. From this also you can get to know about what's the bias going on. There will be some days like this, your stop loss will get hit for sure, 100%. Okay, because but overall you can get a good bias for many days, and then one day you will get a loss or a break even, and then you can switch your bias, and then you can get another this type of candle, and then you can switch your bias. And it's like not looking for the swing highs and swing lows and waiting on that. You can do trading on the basis of that for intraday. Candle range theory is for intraday. Looking for daily bias is for swing traders, and if you're a scalper, just look for the short term trend. Okay, and all of this needs a risk management, so you should apply your own risk management on the basis of your what's your capital, and or what you are doing about that. So you should know what's your capital. Okay, and it's based on the risk management, because if I give you one risk management, it will be based on 100k. Okay, and the basic risk management is risking 1%, and if you take a loss, just cut down the risk, and if you take another loss, cut down the risk, and if you take another win, just increase the risk which you have cut down in a previous trade, and just keep on doing that. That's a normal risk management. So I hope you understood. So the summary which I'm trying to do is, like, I tell you what is daily bias. I told you that where the daily bias is used, it's only used for the traders, those who are trading on 4H or 1H time frame and holding trades for few days, or the swing traders. And what I told you that what's a short-term trend is. Okay, short-term trends is very useful for traders, those who are trading on 15-minute time frame or on 5-minute time frame. You should only know the short-term trend, and how you will get to know the short-term trend by looking at the higher highs and higher lows, and all of the sudden price goes and gives a breakout structure. That will be your entry signal. And I told you about the daily bias also. Look for the swing highs and swing lows, and just wait for the price to go and take the liquidity. And I told you about the candle range theory also, because if your bias is bearish, so if the previous day's candle was bullish, so today's candle will also go and take the previous day's high. It will not go and take the previous day's low. If it goes and takes the previous day's low, it means your candle range theory or your bias is totally wrong, and wait for the next day. Okay, so I hope you understood. And if you guys have any questions, just let me know in the comment sections. And if you guys like this video, drop a like, share it with your friends, and subscribe for more content like this. Okay, so until next time, wish you good luck and be safe.